Good day and welcome to another episode of Skytale Insights. Today I'm joined by Erik Haines, Managing Director, Head of Qsight, a leading provider of data, insights, and analytics in medical aesthetics. Erik and his team sit at a unique intersection of investors, manufacturers, and operators, giving them real-time view into how patient behavior, provider dynamics, and category trends are evolving. Skytale recently partnered with Qsight on our newest medical aesthetics white paper, which has provided the industry with the latest data points that we are all seeing. We're very excited about that. Erik, thank you so much for joining us for your second episode now.
Yeah, absolutely. Thank you, Ben. Always love to be here. Love to talk data and love to track all this interesting activity that's going on in the industry. So excited for the conversation.
I'm excited as well. This is certainly one of the treats I know for our team. One, getting to work with your team, but then two, we've heard feedback. I think this is the most comprehensive white paper that the industry has today. So I know a lot of excitement around it and gotten a lot of good feedback. So thanks again for teaming up with us on that. And maybe, as we put it together, I'm always fascinated by what the overall theme, the overall story is for that current year. Maybe starting at a pretty high level, as you went through this, and I know you already know all of the data points and so forth, but maybe as you were thumbing through it, what really stuck out to you, from the overall industry and its growth and where it's headed? What were some good themes? I know I have some here I want to ask about, but curious your initial thoughts when you thumbed through it.
Yeah, for sure. I think there's a lot of activity happening. I think it's been a transformative year. Have the benefit now of getting some of our full 2025 numbers hot off the press as well. And so when we did analysis and kind of looked back at 2025, I think the things that really stood out was from a very high level, patient demand spend continuing to increase, although not nearly to the extent that it was post-COVID, but there is still a net 3% overall increase that we saw in patient spending on aesthetic practices as of the end of 2025, looking back. So it's nice to have that undercurrent of continuous growth. But that actually speaks to non-surgical side of things. And because historically one of the areas that we also track is patient spend on surgical procedures. And that had, of course, also accelerated post-COVID, but was really kind of flat for the past couple of years, except for 2025. So we saw some decent double-digit growth in patient spend on some of the surgical procedures, which was interesting to see. If we kind of double click just maybe one level down, I think some other key takeaways. I think when we spoke before, it was like weight loss, like 200+% growth year over year. We kind of seen that reach a point of equilibrium, at least for the time being, where the patient spend in aesthetic practices for GLP-1s and other weight loss as a category kind of leveled out. And so it's still a significant portion of revenue for some aesthetic practices, but it hasn't been that meteoric growth trajectory that we had seen in the past. But what has, in addition to surgery, is also like certain areas like some microneedling treatments, some other pockets of areas where you maybe wouldn't have expected. That's mechanical microneedling. We're seeing that. I think that comes with innovation and mixing of new treatments, new modes, new ways of applying and engaging with these patients to be able to add a more robust patient journey. So I think that's an opportunity and something that we're definitely seeing as well.
That's great. So I think, first year in a couple or few years that it sounds like non-surgical and surgical both grew. So that's exciting news. Sounds like non-surgical, in 25 kind of followed the previous couple years themes of growing at single digits. You touched on it there, Erik, but some diversification of revenue that's continuing. You talked about medical weight loss. And yeah, I think, In 23, it grew like 235%. 24, it grew 55%, which is still good, but certainly lower than 235. From a percentage perspective, dropping, does that have to do in medical weight loss? Does that have to do with maybe a more, I don't want to use the word mature because we're still only a few years in medical weight loss, but does that have to do with such high growth that from a dollar value perspective, it's still a nice increase? Or do you see some sort of saturation there? When you look at medical weight loss specifically, what do you think there?
Yeah, we're still talking like on the order of like 2.2 billion in patient spend on weight loss just in aesthetic practices alone. So it's, still a meaningful segment. I think, based on what we're seeing and kind of just following the news, right? It's been a lot of headlines from a regulatory environment for GLP-1 specifically, and how patients can get access to those. So the shortage ended last year. With the shortage, there was a definite strong demand for those compounded formulations of GLP-1s, which patients are able to get in and available in many med spas, and actually drew a lot of patients in. So now with that environment changing and patients able to have more means of accessing these, whether it's through some direct-to-consumer initiatives or even the big pharma manufacturers themselves, Novo, Eli, et cetera, see the opportunity here and are working towards that. So that's kind of moderated some of that. But what I would say that's worth noting is there's still a significant amount of spending. We calculate around 375 million of patient spend on the weight loss category that isn't GLP-1s. And that has also grown 20% for this year over year. So that is still an area, and we're talking, think about areas around like nutrition, supplements, vitamins, vitamin B shots, et cetera. So kind of supporting those. And we've seen a growth of practices that can offer products, treatments around supporting GLP-1. So if the patient is already on them, they're at the practice, we're seeing that as a key growth area still, regardless of kind of what's going on from weight loss as a general category.
And that's such a great point, that last one you brought up. I'm glad you brought that up. But before we get into that, you mentioned the spend. I think you said 2.2 billion, which, I know one of the things that this white paper does, and the last iteration did as well, is it had everything broken out by percentage of total spend. And I believe in this last one, it was about 11%, if I recall, on medical weight loss, which is a slight uptick from our first version. And I would say that that's probably where, if I'm putting on my investor hat, that's probably the max that I wanted in, because I know from an investor view, a revenue percentage, you don't want medical weight loss to be too high, because there's that risk that the revenues could go away. Is it on the shortage list? Is it not? We've all seen some of the potential lawsuits, or some that are ongoing. So that may not be a bad thing. But you brought up a fascinating point of somewhere between 300, 400 million on some of those ancillary services that support weight loss if you're on it. You talked about nutrition and so forth. And I think that's one thing aesthetics does so well, is it does a really nice job of, under its umbrella, continuing to bring on other, revenue service lines. And you're kind of getting into a little bit like maybe wellness longevity. I don't want to put words in your mouth, but maybe I'll pause there and maybe let you take us down that path. As you start seeing that, the $400 million spend, these are things that we didn't talk about last time, right? We didn't see as much of this. What does that signal to you? I mean, you talked about the market's still growing, the patients, kind of evolving. We're still, the patients are still making the market grow, but it's evolving. Maybe this is one of those evolutions. What is it showing you or telling you about future trends?
Yeah, absolutely. I mean, you hit the nail on the head with the concept of evolution. I think one of the things that has been the case, perhaps more so than in the past, is that evolution in patient preference Some of that's driven by, right, like the shortage and the regulatory environment, as well as like looking forward to innovations, approvals, et cetera. But it's also driven by a kind of evolving view into how patients view the aesthetics industry and sort of what those treatments are. I mean, we're seeing that a pretty strong multi-year decline for, let's say, HA fillers as an example. They're not going away, and it still makes up 17%, a significant amount. But with that, you have growth in GLP-1s that have really defined the past few years. We actually, just to cite one of the metrics to show how important that was historically, we were looking at kind of same store sales growth for practices. And this was true last year when we looked first 23 versus 24. We saw that practices that offered GLP-1s actually grew their revenue versus those that didn't offer GLP-1s, actually their revenue declined. So, that's dynamic, may not be true now necessarily, but it's all leading to this concept of this evolution within patient demand and opportunities then that can create for med spas and aesthetic practices. So I think that's been one of the reasons why this industry is so great to track, is because there's always something new and interesting. And you're touching on wellness, right? We could probably have an entire separate discussion specifically about the opportunities there and sort of some of the trends that we're seeing. But the thing that I will say is, like, for these wellness type treatments, you want to have the guidance of a medical professional, right? So you have these medical spas, you have these folks with this medical training that, I think with the appropriate oversight and training could really expand into this category as well. So, not to get ahead of ourselves there, but ultimately there's tremendous opportunity, and these are the kinds of things that I like to track.
That's fantastic. And I have a feeling that we will be having an episode on wellness and longevity and functional medicine at some point soon, because yeah, I mean, that's an entirely new category that's become extremely exciting, under the aesthetics umbrella. You mentioned dermal fillers and the fact that, while they still make up a significant percentage of the market, we saw a bit of a decline. Let's get into that a little bit. What's the market saying when overall I think it was down 4%? And then when you look at it, I think HA fillers were down 4%, but biostimulators were up 4%. And then if you look at what the market is saying, biostim, I think the data said 16% of the filler market in 22. Today, first half of 25, and you may have later numbers, but first half of 25, 23%. So that's a significant uptick. It's a significant shift. What are the patients telling us when you see these kind of stats under that filler market segment?
Yeah, I would say that, right, the patient perception of HA fillers and sort of this filler concept, like we see Evolus with their big program, like drop the F word, right, as the terms of kind of how that's perceived. And so I think perhaps there was some over usage of that kind of going through the pandemic and a bit of a backlash there. And so patients are looking for things that are a little more subtle, a little more natural. And with that, right, the biostim type filler and sort of the use and indications for that are kind of representing a bit of a different demographic and different aim there. They tend to be more for the lax skin than sort of some of the facial contouring that was very popular with HA fillers. So, talking to a lot of docs in the space, there's a firm belief that HA will always have its place, and we've seen some new innovations. And actually, despite kind of carrying that number through that you mentioned, which went to 25% of that by the end of the year, so that trend continued through the end of the year. Wow. There are signs that we're seeing that there's kind of a return to that focus on HA. We have some like new product launches in the space, as I mentioned, innovations, and some practitioners are looking at their plans for marketing and promotion. And actually the focus on HA is kind of coming back a bit. So it's going to be a really interesting year, 2026, to see, does it finally find its home in a kind of stable use and have a way for patients to work with this treatment in a way that, right, really kind of adjust to this new perception of what beauty is and how to make the look natural, et cetera. So it's something that I think is going to be really exciting to track in 2026.
Yeah, it sounds like it. I didn't know some of those latest stats you threw out there, so that's fascinating. But it's also it's great to hear that BioStim continued its upward trajectory in 25, ending at, I think you said 25%. Another category within that's significant and had a significant shift, and curious your thoughts as to what that means, is energy-based devices, down, I think, about 5%. And, within that, though, when we break it down, non-surgical skin tightening grew 6%. So this seems to me, but I'd love your thoughts. You're very deep in the data. This seems to be as maybe the market speaking of, maybe medical weight loss, taking some of that need away. However, now I need skin tightening. So maybe it's due to, kind of patient behavior within aesthetics. What did you make of it when you saw some of those stats, and maybe what can we expect in the future from that?
Yeah, for sure. I think, there was the words of one of the doctors that we talked to. It's one of our panelists that I think summed it up well, where it's like patients are looking for true weight loss, which, like, the body contouring devices historically could provide some help with toning, et cetera. But is it that true weight loss? So some of that spend, it seems, has kind of either migrated to there, or the spend has decreased the demand for these types of treatments. But on the counterpoint to that, as you mentioned, right, that skin tightening treatments, some facial rejuvenation, those areas we've actually seen growing in both energy-based and non-energy-based as well. So there's an increased focus or demand for patients to have these skin rejuvenation, skin tightening treatments really across the board. So I'd say, we'll see how that dynamic evolves. And if the body contouring category and the devices there can find their footing and find a way of treating these patients despite all of this change in the market.
Yeah. And then maybe to round out all the big categories here, medical grade skincare stayed fairly consistent. So I don't think much to talk about there. Feel free to chime in on that if you want, but certainly want to ask, neurotoxins growing 8%. What's the reason for that? I mean, that's significant growth for a portion of the market that's been around since its inception, really.
Yeah, absolutely. That's been kind of the continual engine, if you will, of growth for this industry. It's the gift that keeps on giving, so to speak. So yes, there's been continual growth there that we've seen. What's driving that? Yeah, it works, right? It's something that has the results and does so in a way that with the current understanding of beauty and kind of having that natural appearance, it works. So patients keep coming back for that. The other thing that I'll say too about, particularly on the neurotoxin side, you have a treatment that requires its maintenance, right? That's kind of built into it, right? Fillers can sometimes, depends on how long they last and how often you'd get them, but they're 90-day, every 90 day to get the toxins. That's been a really great driver, not just for, of course, neurotoxins as a category, but also for bringing those patients back in. To even talk about this a bit further, what we did is we looked at the different treatment categories that brought back the most patients year over year. And so this is an analysis we did just recently where we looked at patients that went into their aesthetics practice in 2024 that came back to that same practice in 2025 and what was really driving that. And sure enough, perhaps unsurprisingly, we saw that neurotoxins really drove a lot of those repeat patient visits. So, engine of growth works, seems to be not going anywhere anytime soon. And the last thing I'll say, have a couple recent entries into the space as well. So it's starting to get more competitive from a brand perspective. I mean, we can sit here and talk about Botox, right? But now we have, I think it's at 6 at this point, different approved toxins for the US market, and that could be set to grow. So that's also creating, some interesting dynamics. And I think that competition within that space is probably good for proving out and ensuring that practices kind of know the specifics, are able to kind of refine and speak to the precision and ability for each one of these brands to have their kind of unique place, because that's something that is a big focus for the manufacturers.
Sure. And, in other non-US markets, you see that competition that you're alluding to there. And yeah, certainly that was one that we were excited to see, growing 8%. You mentioned, the repeat customer, repeat revenue. That's always a fantastic thing and just allows the entire industry to grow beyond that as practitioners suggest, treatment planning. So I think that takes really good care of the overall what makes up the non-surgical market. Now, if we can talk, and we'll keep it high level for now, and then I want to dig in a little bit more. But one of the things I found fascinating as well is regionality. So, I think if I recall, like the Northeast and the West, I think shrank a couple percentage in year over year revenue growth. I think the South or Southeast remained like at zero. But the Midwest grew significantly. I think it was 8% growth in the Midwest. What were you seeing there? What do you attribute that to?
Yeah, we actually did an analysis to try and really dig into this a bit more by looking at, I think it's a kind of a fun metric, which is like med spas per capita, and looking at some of these different areas. And so, it kind of, what fell out of that analysis was, some interesting insights on those areas. But I think part of it too has to do with like level of market saturation and opportunity. Med spas are relatively newer in the marketplace. And so, with that, right, you look at some of those areas in Northeast, West, et cetera, that were likely, have that saturation point sooner, but leaving those pockets in those regions where, there's still additional opportunities for growth. Maybe in certain areas now you have your local med spa more accessible than you had before. So really attribute that to kind of filling that in. And it's something that over time, how does that normalize? Like, what are we going to see there? And I think that leads us to an interesting point around consolidation and operations, et cetera. But I would say, particularly regionally, it kind of led to just market demand kind of being filled in.
Yeah, that makes sense. And, maybe one follow-up to that. I recall a couple of years ago seeing some stats from you. And if I recall, it was something like 17% new med spas in a certain year. I think it was maybe in 23. And then you started looking at the growth, and it was like 5% growth. And
Yes.
so you start scratching your head because that's backwards. But my thesis on that is when we saw that double-digit CAGR, that double-digit growth for a good number of years, especially, coming out of COVID, that pent-up demand, I think a lot of folks thought, well, I'm just going to open my own business. But, opening a business, running a business is very difficult. So I'm actually curious exactly what you said. My thesis is that at some point that growth will normalize to maybe get a little bit closer with the market. And I think overall it'll help the patients, because at the end of the day, very well-run practices are going to survive. But with that, I'm curious, are you seeing that, back then 17% new med spas? What are you seeing now? Do you have any more recent stats that are showing, okay, the market is growing here, the number of new med spas that are opening are, X? Is that coming more in line, or are you still seeing just, kind of that med spa in every corner model, which is what it feels like it's going to?
Yeah, one of the areas that I think will be really interesting to watch with this, particularly as a med spas, and you talk about market optimization, right, is that ability to potentially even start to specialize. Like, we talked about wellness before, and, there's innovation, demand. Of course, there's kind of blowing up. So maybe med spas can kind of go in that direction. Like we did an analysis, we looked at like 30,000 aesthetic practice websites, and we found that 50% of those websites mentioned wellness in some form, and 1 in 10 mentioned wellness in their name. So this is a trend we'll be tracking over time, but it does kind of signal that, right, there is this importance of this other category, other segment. So yes, while that market normalizes, the question is, as the patient demand evolves, are there going to be opportunities for specialization to at least some degree? Is that something we're going to be seeing?
And that's fascinating. Maybe a couple comments. Number one, if I'm listening and own a med spa, I'm extremely encouraged by what you said around the growth now being, kind of mid or low single digits. I think that's more in line with the market. And what I would take away from that personally, if I own one, is okay, now I would expect to see, if that trend continues, I'd expect to see that year over year growth, organic growth, if you already own a med spa, to start ticking back up a little closer to being in line with the market or above market if you're one of the better run businesses. So I think that would be extremely encouraging. Two, if you ever do come up with a way to figure out closings, that would be interesting to see if our thesis actually played out. And then, maybe we can take it a little bit this way. You mentioned 50% of websites you look at mentioning wellness and 10% having it in their name. I would have gotten that answer wrong had you asked me. That's extremely high. So, you talked about specialization and so forth. As you look at the data, like what categories or technologies or what part of aesthetics is out there that's starting to get you a little bit excited? I mean, the data that you're seeing, it's kind of telling you where things are trending. You mentioned that example, wellness, just now. Is there anything else that you're seeing in the data that, maybe we ought to be paying attention to that gets you excited?
Yeah, I think so. I think, one window into this is the 33%, and this is 2025 versus prior year that we just, again, hot off the press numbers, 33% patient spend growth in mechanical microneedling, right? So this is a category that has kind of had this resurgence, and we attribute that to some of the additional topicals and alongside that, exosomal therapies, regenerative, kind of being in combination. So with that, that's kind of a general trend in like we call professional grade skincare in a practitioner office. It's like ways that can be combined for post-treatment care, incorporated into the patient journey. And so those are areas that we're starting to see some potential growth to, because if you're able to, as a med spa owner operator, kind of understand and know how to treat that patient, not just there in the practice, but also kind of tie that to a full treatment plan that incorporates that skincare, we're seeing more relevance there, more sort of dialogue, if you will, in the industry around kind of incorporating that into patient journey. The other area too, I want to kind of mention is in the hair side. That's another analysis we did recently on kind of looking at a percentage of aesthetic practices that offer hair. So we're talking about patient spend that has increased 5x since 2017 on hair treatments as well. So pretty meaningful. Coupled with like you have like the crossover of hair and regenerative with like a plated coming out with their product, which has done really well. We've seen that in our data. So, these are the kinds of things, again, back to this interesting space with a lot of evolution that we're tracking. One other thing that I'll mention too, which I think is a bright spot and important for folks to really appreciate, is we wanted to get a sense from patients in our panel to understand aesthetic patients. We surveyed 700 aesthetic patients to know how aware were they of some of these new innovations and new treatments. So of that, We asked about exosomal therapies. We asked about PDRN, polynucleotides. And we found in these cases that the majority of them, more than 50%, were aware of some of these newer emerging trends, which was great awareness. And of those, the vast majority were curious and wanted to try or plan to try something new, these innovations. So I think that signals, right, there's awareness and curiosity with the patients. And so that can lead to good conversations, relationship building with practitioners, et cetera, but also kind of helping fuel that ongoing growth and staying ahead of some of these trends and having there be opportunities for practices and practice owners to really appreciate that and use that to help their patient have the best experience possible.
That's a great study and really signals what we're seeing already, right? Like, I think that's the reason why some of these other categories are nicely folding under the aesthetic umbrella. Now, Erik, one of the things that we always try to unlock is if I own a med spa and, we've talked about this, number of new med spas opening up, outpacing the growth, it's coming back in line. We talked about the Midwest growing, but the other regions somewhat being flat year over year. If I own a med spa, I want to have a high-performing practice. What are you seeing in the data points for those practices that are doing a nice job with that organic year-over-year growth? Is there anything that comes out?
Yeah, absolutely. There's a couple of things to comment on. I would say my previous stat I said earlier around those practices that offer GLP-1s versus those that did not kind of had a different growth profile last year. So I think what that signals and what we're seeing in our data is like that ability to have an adjustment or be flexible and understand, right, that this is a dynamic space and patients are curious about new innovations and new treatments. So being able to maintain that mix without necessarily overcorrecting, right? You don't want to buy every EBD out there and just have it sit there just to say you have it, but it's really effective and appropriate evolution of the offering portfolio that you have and ensuring that the patient, understand those trends and kind of get in front of them. So we see that in the data. Another area that we kind of looked pretty deeply into was this concept of like what builds those loyal patients? Like what are some of those treatment areas that brings them in? As we saw this past year, we saw more than 50% on average across the industry of non-surgical aesthetic patients return to their practice the subsequent year. Now, the top performers there, we saw those rates north of 60% year over year. So that's 6 out of 10 patients that you would see in a year, they'll come back that next year. So these are the kinds of metrics that we look at, particularly for those practices that have been high performing. So a couple areas for practice owners to kind of think about in terms of being able to work towards being as effective as they can in the market.
Yeah, I mean, just that 50 to 60% would do it, wouldn't it? I mean, if you're seeing average 50% data set patient retention, but you're seeing the higher performing side at 60%, you think about that means that's 10% more patients. If you think about revenue growth, there it is. Your practice would be outpacing the market if you're able to achieve that sort of patient retention, which interestingly, Erik, I don't know if you know this or not, but I think it's definitely my personal favorite KPI, that patient retention percentage number, because it really tells you quite a bit about how you greet a patient, how you treat a patient, how you exit a patient, how you stay in touch with them for recare. So it's that's quite fascinating what you mentioned. Now, how about, this is obviously a conversation around data. We love it. I'm sure you run your business that way. We run our business that way. What's the opportunity there for growth if I own a med spa? How are groups utilizing data? Are you starting to see a little bit more implementation of it, usage of it? I know with consolidation, I would imagine that would be a natural eventual next step. As if I own a med spa, I'd be wondering how are consolidators looking at it? How's my competition using it? It certainly is spoken about a lot in the industry now. Um, what have you seen, like how data is looked at and treated today versus maybe when you started down this path within aesthetics?
Yeah, sure. I think I have the words of some of the highly regarded consultants in the space, and they're all about their KPIs, right? So it's like that is just kind of fundamental. It's like being able to look at the data that's collected. We look at a lot of like patient demand data, but there's operational data, there's kind of understanding productivity, there's looking at marketing data. So while some of this can be daunting, there's also a lot of new tools and solutions that have become available to help practices kind of decipher this and be able to look at their data and track it more effectively. So again, if that's like through to some of marketing effectiveness, retention, as we mentioned, or even being able to do an effective ROI analysis on a big capital purchase like an energy-based device. It's like, being able to do that independently and verify that and kind of ensuring that you have the tools and the inputs to do that, whether that's something that you would do on your own, or like I said, with some of those different service providers and tools, it's key, right? Like you can't manage what you can't measure, right? That's a big mantra with my group, and it's very evident here. And so I think it's a good thing to see that increase and more awareness of that. I think competition has kind of made that a requirement, particularly for those that really want to exceed, unless you just happen to be in a really great area and fortunate for well. Although in time, I'm sure like knowing that data, knowing those KPIs, being able to track that and make data-driven decisions is really important.
100%. We have a similar mantra. You get what you measure. So very, very close to the way you guys use that line as well. All right, Erik, a crystal ball question. Put on your futuristic hat. If you zoom out, what makes you the most excited, the most optimistic about the future of medical aesthetics in the next, call it 5 years? What should we look out for?
Yeah. Absolutely. I had the pleasure of moderating a panel at a recent industry conference where I had some of the industry leaders from all the top manufacturers, and I actually asked a very similar question to them. So I kind of have a bit of an insider view into that. But what I will say, like some of the themes from that are, right, like this space is evolving. If you look at the research that's being done, if you look at the development pipeline for new treatments, new mechanisms, new pathways, you put AI on that, and yeah, there's opportunities for a really tremendous acceleration. So I think, right, this wave of innovation that could come through for more effective, less invasive therapies and treatments and products is something that I think could continue to make this industry dynamic and interesting over time. So that's I'd say something that is really interesting to me. Love to have conversations around it, and of course, love to track that in our data. So it's something we'll definitely be looking forward to in the years to come.
Looking forward to that as well. Now, if I'm listening and I want to work with you in Qsight, how can I get a hold of you?
Yeah, absolutely. You can send us an email, qsight-info@guidepoint.com, or just go to qsight.com and you get a flavor for the types of work that we do. And we'd love to hear from you. So please don't hesitate to reach out.
Yes, and I mean, we can verify that we absolutely think the world of you and Qsight and its data and your team is so much good for the industry. Erik, before we sign off, any final thoughts?
I'd say, yeah, know your patient. Like, know the trends, what's of demand, where that curiosity lies. I think there's a tremendous amount of opportunity in just kind of having those conversations, developing those relationships, working through attention, and just kind of knowing what dreams and aspirations and hopes that your patients have, and that can help define your portfolio and ultimately make a better business for you.
Excellent advice. Erik, thank you so much for joining us today. Really always appreciate our time and always enjoy learning from you.
Absolutely. It's always a pleasure to be here. Love talking to you, Ben, and look forward to future conversations around data and this really cool industry. So, but would love to come back anytime.
We'd love to have you back. And thank you for listening to another episode of Skytale Insights. Until next time.